Hello everyone, and thanks for tuning in for another Market Outlook by Exness. My name is Stanislav Bernukhov, Senior Trading Content Specialist here at Exness, and in today's video we're going to be checking on a possible trading idea for the week ahead, the possible narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of the last week's idea. The idea was a sell for crude oil with a target area around $60. The idea was partially correct, with the instrument almost having reached the projected target. The idea is still active and may take longer time to work out. The possible reason for the delay is a government shutdown in the United States, which had put on hold some important economic publications. Now for this week we are looking at long USDJPY. It has broken out through the long-term trading range with high volatility and may proceed moving higher towards at least 152 price area and higher. What is the narrative behind this idea? The idea is built around a possible paradigm shift in the political landscape in Japan. The new Prime Minister Sanae Takaichi unexpectedly won the leadership race for Japan's ruling Liberal Democratic Party on October the 4th. Traders expect a shift in monetary policy, with slower interest rate hikes, as previously she criticized the central bank policy of increasing interest rates. As a result, the massive amount of bullish bets for the yen was closed after the election, driving USDJPY to the new peak with high volatility. Despite that, yields of 30-year bonds for Japan have jumped to the new peak too, almost reaching the 3.3% level. So the result we've seen for USDJPY was associated with closing shorts, but new positions also have started to build in the futures market, as we see from the volume and open interest from the Chicago Mercantile Exchange statistics. According to Commitment of Traders report from CFTC, the net position of large speculators for Japanese yen futures has been declining, pointing to the increasing number of bearish bets for the yen. Technically, USDJPY has been locked in a long-term trading range since July 2025. Volatility has been declining and the breakout was expected. The main question was in which direction the breakout would happen. The direction now is determined. The price had jumped for more than 3 values of daily volatility level measured by ATR, and in the majority of cases it's possible to see the expansion of the momentum within the next 3-5 days after the breakout. It might not necessarily be the long-term trend, but the short-term paradigm shift now plays on the short side of the yen. Which economic data could affect this trade? Generally, all positive data for the world's economy could boost carry trade operations for the yen, so I would highlight FOMC minutes publication on Wednesday for the United States, Michigan Consumer Sentiment Index, as well as PPI Index for Japan on Friday, October the 10th, 2025. So in summary then, the trading idea for this week is a buy for USDJPY with a potential target of 152. The main narratives are the expected paradigm shift to the monetary policy in Japan, the revival of carry trade operations, and acceleration of the price momentum after the sharp breakout. The economic data to monitor is FOMC minutes for the US on Wednesday, PPI Index publication for Japan, and Michigan Consumer Sentiment Index for the US on Friday. Remember, this is not a signal, it's just the idea for a trade, it's not a guarantee of success. Always do your own research and never forget to manage your risk.